Jim Cramer's telling us now may be the time to take some profits. I actually want to reference one of our big money movers this morning, of course, FedEx. Before yesterday's report, the stock had moved more than 60% higher. After that report, is that the kind of stock that you think that investors should possibly consider taking some profits on?
For sure, I think now is a good time to reassess the portfolio, Frank, but we're more encouraging clients to think about raising cash if there's a liquidity need in 2024. Market's been red hot. We're encouraging clients after January 2nd, if you have an outflow for tuition, for a down payment for a home, a major tax payment, do that after January 2nd when these markets are high and rebalance the portfolio. Yes, I think most clients have been overweighted now in equities given the run up of the last 6 to 8 weeks. So now is the time to reassess your liquidity needs, rebalance to those areas that have been out of favor.
So, Greg, I want to ask you about this. We're getting more and more dovish talk from Fed officials. Just yesterday, we had Goldman on forecasting 5 quarter-point rate cuts next year. Wouldn't that set us up for a rally? And at the same time, you're telling your clients, to take their money out of the market. This just seems counterintuitive.
No, not take money out of the market, but thoughtfully rebalance the portfolio. Okay. Our view is that the market may be a little ahead of itself, Frank, just given the run of the last 6 weeks approaching these record highs you mentioned. And so what we're suggesting is to go back and look at what areas have been out of favor. I think the market is the Fed likely is going to be a little higher for longer. If you look at what the Fed officials have been saying, the market may be too optimistic about rate cuts. Given what the Fed's saying that rates are going to be higher for longer. So our view would be we expect a more choppy, volatile market next year. For sure, no major meltdowns, but I think we're in a sideways market that is looking for a catalyst for that next leg of growth.
So give us a sense. You agree with Cramer, now's the time to take profits, but you're saying you don't want to take the money out of the market. So when you take the profits, what do you do with that cash?
For sure. So I think there are some areas that investors should be looking at. Much has been spoken on this network and others about equal weight and dividend value stocks, and we think that makes sense. But there's also areas where we're looking opportunistically. Biotech and healthcare. The M&A environment was so chilled last year, no IPOs, no M&A activity, and we think those valuations are attractive. Large pharma has huge patent cliffs, and the overage population of over age 80 is going to triple in the next 25 years. So we think there's real value in life sciences and healthcare. We're playing that through the Eventide Healthcare and Life Sciences Fund. We also really like the international markets right now, Frank. We think that given the wars overseas, they've grinded higher. And if the Fed does in fact hold or cut, we think that bodes well for the dollar weakening, which should support foreign equities outperforming our own over the next 12 to 18 months.